How to identify trend reversal. That is the topic for today, and it's actually part 4 of a 5-part series on how to determine whether the trend is going to end and turn around, get a trend reversal trade, or if the move against the trend is merely a short-term retrace and then the trend continues. So today we're going to add volume, and I have put all of the links to the first 3 YouTube videos in this series down below in the description, so feel free to check that out. And one real quick thing I just want to say to set it up for this topic today, and then you can, I recommend you watch this as a whole because no one of these techniques work by themselves. We're putting together, well, preponderance of the evidence. It's almost like a legal case where there's no one thing that is going to tell you whether a trend is continuing or reversing. That takes actually several different things we put together, and that's why this is a 5-part series. So let's jump into it right now. So here's an interesting thing. Volume, first of all, the meta pattern for volume, ideally in an ideal world, which we don't live in, by the way, is to have something like this, where volume would be increasing and price to be increasing. And then you would think that would be a strong trend. But as you can see, actually, that doesn't work so well. The market topped out there. And the reason for that, or one of the reasons for that, goes back to video 2 in this series about how early or late you are in the trend. And I gave you the indicator on how to determine that in that video. That was part 2. Okay, so volume is a little trickier to read than most people realize, and it needs to be put together with, again, where you are in the trend and all of that. So 15 EMAs are a line in the sand for retraces. So as we look, and this was in the first video, we want the price to stay above the 50 EMA, okay, as it does all the way through, well, here. And the reason for that is we want to show strength up, weakness on the retrace. Strength up, weakness on the retrace. Strength up. So we want the moves up, the impulse moves up, being stronger in time. In other words, the number of bars, and also in range, the difference between the price of the low to the high. And that just shows that accumulation is coming in, and there's not anybody really significant with big money who are shorting these highs, but rather they're buying the lows. Okay, and that's an indication, our first indication actually, as to the line in the sand, where we would determine, oh, this trend is now iffy. So for example, over here, you see we get consolidation, and it goes below the 15 EMA, above, below, and then above. And so that's no bueno. We don't want to see that if we're trading trend continuation trades. So this is a consolidation pattern, and it can break up or down. But officially that trend has now ended, and now, well, we don't know if it's going to reverse. We've got to see a more significant pattern than this, because sometimes trends can end and go sideways and then continue a second trend in the direction of the first trend. In other words, don't think that all trends end with reversals. In fact, I would say most times they don't. Most time a trend ends in consolidation like this. So, but that's fine. And then I would exit in here and just say, okay, made a lot of money. That's good. Don't get too greedy. And when the signals are not there, then don't take the trade. Only trade clarity. Okay, so now if we look at volume, here is a very, very, very powerful signal. So I often find that volume ends with, or the end of a trend will end with a volume spike. Now again, we only look for that early in a new trend or late in an old trend in this case. If we're going to get a trend reversal, then we want to see a volume spike. They don't always end that way, but again, there's nothing that works all the time. So this is one piece of evidence, one of 5 pieces of evidence. When all 5 of those align, then we take the trade. If only 1 or 2 is there, then I just don't take the trade. It's not a high probability trade. So this could be an exhaustion pattern here, but let me teach you how I read this. So we look for these volume spikes. Okay, and we're not super long in the trend here. This is about medium. It's not early, it's not late. It's kind of medium in the trend. So when we get this volume spike, that could be the end of a trend. That could be an exhaustion pattern, but we still have our good old friend, the 15 EMA here, as our line in the sand to determine whether the market's really selling off now, which would create a trend reversal. It doesn't. It holds the 15 EMA. And so then we look for our second signal, step 2. We look for another volume spike. But this time, it's after this one, and so we got 2 in a row. That one was an exhaustion pattern, okay, caused the retrace, and then we're going to look for more volume, but stay above the 15 EMA. And the trend is still good. The trend is still going. And now we got new buying volume. So probably what happened here, and again, we can only theorize, is that there are a lot of people who did exit their trend trade here and just got out. But they didn't go short. There wasn't a lot of short positions. It was just people closing out their positions, which is why it didn't push down below the 15 EMA. And then we got some people that said, oh, well, we didn't make a dramatic move down. In fact, it was a complex retrace, which is actually a sign of strength for it to go back up after that. And then we look for another volume pattern as it stays above the 15 EMA. And so, you know what? Some people are coming back in now. And they're still saying, oh, okay, maybe I took some profits there, or maybe we have new buyers coming in. And a lot of people who buy trends, they wait for a trend to be very clearly established, which is a mistake, by the way. But nonetheless, they do. And knowing that, then, and with this big volume pattern, it's like, oh, okay, cool. This thing still has some legs to it. It actually has one more leg, and that's it. And then, you know, again, we do this little above and below the 15 EMA, which is the line in the sand. And that's just, I mean, we're talking, you know, these are daily bars here. So this is a long time. I'm not going to hold on to this for where I could take this same money and put it into another trade, in other words. And then, yeah, it goes up again above the 15 EMA, but then it comes back down again. Now here we get more of the typical meta pattern that we mentioned at the beginning. So if we go down here a little bit, okay, then we see that as the market comes down, again, below the 15 EMA, our line in the sand, okay, it comes down, and sure enough, I mean, here's roughly the range of the recent activity during that consolidation period. And now, whoops, volume does get above the average recent volume, and that indicates strength to the downside now. So what I mean again is short selling is coming in, and so that pushes us to the downside. These are not people just getting out of an uptrend, and that's indicated by, again, the volume being higher than recent. And then up there's another exhaustion pattern. Okay, and it comes in here. In fact, if we look at video number 3 in the series, you've got a candlestick pattern reversal there. 3-bar, well, an engulfing bar that engulfs the last 2. That was one of the distinctions we made there. Not just engulfing one, it's not just a 2-bar pattern, but it's a 3-bar pattern. And so there you go. So, yeah, volume is not as intuitive as one would like to think. That's why trading it by itself is pretty close to useless. You need to understand price structure first. So price structure comes before you analyze volume. So as you analyze your price structure, how late are we in the trend? What kind of pattern are we putting in? Are we in a trend at all? Are we consolidating? All of that. Then you look at volume second to help you interpret what's going on with the price pattern. So hope you enjoyed that, and we're going to have part 5 come out here next week, so look forward to that, and that will then conclude the 5-part series on whether a trend will continue or reverse. By the way, another thing that's really helpful is to have my cycle indicator on this. This helps to time the swing highs, time the swing lows with great precision. We've recorded it for you. Just go to indicatorwebinar.com, pick it up. My gift to you.